Hello, this is Strictly Money, and I'm your host, Saijal Patel. Thanks for joining. If the stock market volatility is making you skittish about investing, you wouldn't be alone. Maybe you're second guessing your investment decisions or avoiding investing altogether because you think it's too risky. What if I were to tell you that leaving all of your money in a savings account is risky as well, and that you can build wealth without losing sleep? Sam Sivarajan is behavioral scientist, and he's the author of Making Your Money Work: The Secrets to Financial Health. And he joins me now. Hi, Sam. Great to have you back.
Saijal, thank you for having me. Great to be back.
So, Sam, when the markets are down, there's panic. When they're up, there's euphoria, and no one thinks it's going to crash. And yet, history tells us that there are corrections and there are even stronger rebounds. So, when you know that, why does rational thinking just go out the door?
Well, it's a great point, and I think you put your finger on it, Saijal. I think it's basic human emotions. People are greedy when markets are up, and they're fearful when markets are down. And the reality is that we're all looking for shortcuts. We want to get rich quick. It's simply how human beings are wired. But it's like getting fit. There are no sustainable shortcuts. So the formula for being fit is simple, I should say. It's eat less than you burn, but it's not easy to do. And just like there is no magic diet pill, there is no magic investment.
Right. And I remember you saying at one point that, right, investing is easy or simple, I guess, and not easy.
Yeah, it's simple. What I mean by that is that it's not rocket science. The principles are not difficult to contemplate, but it's not easy because it requires a degree of discipline, self-discipline, and self-awareness. Exactly what you talked about, that knowing that these cycles repeat, but yet not giving into the emotions, whether it's greed or fear at any given moment.
So, Sam, how much does tribalism have a part to do with, this need to belong to something bigger, approval?
So I think what you're talking about, tribalism or social proof from a behavioral science perspective, is something that we use as a shortcut, meaning that if others have invested, we think it must be good. And part of it is that we believe that means that we don't have to do our own homework. So take the Bernie Madoff example. He was able to rip off wealthy investors for over $50 billion and got away with it for so long because everybody assumed that the other person had checked out Madoff. Now, this social proof is everywhere. We see it in our politics, we see it in our fashion, we see it in our taste for music. So, as you say, we follow our tribe and we pretty well ignore any other information that's out there. So, in investing, it is what I call the hype cycle.
Yeah.
We have media and social media that make darlings of certain investments, like WeWork, like crypto, like meme stocks, and we pile in because we're afraid of missing out.
Yeah. And that's a really good point, Sam, because all of this does lead to buying into hype, right? We know that FOMO, or this fear of missing out, is real. We've seen it with crypto, for example. We've seen it even in the
Right.
housing market. So what do you
Yeah.
advise?
Well, I think one thing that you can use is this concept of second order thinking. And what I mean by that is asking repeatedly, and then what? And then what? So, what has to go right for things to turn out the way that I would like it to turn out? And what could go wrong? So, you mentioned housing. So, until March, house prices kept going up. But this second order thinking would have made buyers and sellers think deeper. So, what has to go right for housing prices to keep rising? Immigration needs to keep going up. Interest rates need to stay down. The economy needs to grow. The affordability of housing has to rise. And this housing supply has to stay low. Now, we know that since March that none of these things have happened. And so it's no wonder that house prices are falling. And this is the power of second order thinking, asking these questions and answering them repeatedly before making an investment decision, for example.
Okay. So it sounds like it's really about risk management, right? Looking at the probable downside.
Yes, I think risk, as you know, Sajal, in investing is a oft talked about concept, but it's one that is not particularly well understood. So if you are an investor, what most investment firms have you do is to fill out a risk questionnaire. And the focus on this risk questionnaire is supposedly tolerance to volatility.